Hi Pranaswa, I'm Kostri from Profit Group. Would like to present our group proposal. Okay, let me start with my slide first. Okay, our product name and a company name is actually Nesboost. I would like to give an introduction first. Okay, Nesboost is a manufacturing industry and also a beverage company that sell energy drink. Okay, our product is actually an energy drink throughout the Malaysia. We come up with a new market and also with embody with the global leadership through innovation, success and growth strategies. Okay, our company will launch a Nesboost official website, especially catered for Malaysian, and we set the price of 10 ringgit per bottle of Nesboost, and also we targeted to sell 700,000 bottles of the Nesboost. Okay, now we go for missions. Okay, our mission is to be a first choice in energy drink throughout the Malaysia, and also our mission is to provide the best energy drink to all the people in the Malaysia. Okay. Now I would like to present about the planning master budget of income statement. Okay, when we see an income statement of this Nesboost, we can see a sales of 7 million. Cost of goods sold is 5,484,500, and also our gross margin is 1,550,000. Our gross margin is 1,515,500. Selling and admin expenses is 500,000. Net operating income is 1,015,500. Interest expenses is 132. Overall, our net income is 883,500. Okay. Now we go to the balance sheet. Okay, from the balance sheet we can see our cash is 5 million, and total current asset is 13 million. Total fixed asset is 13,120 million, and also total liabilities is 13,120. And now we go to the cash flow. When we see a cash flow from the changes in operating asset and liabilities is 3,400,000. Cash generated from operation is 4,320 million. Operating cash flow is 4,277 million, and cash flow from investing activity 5,967,000, and cash flow from financial activity is 9,067 million. And cash equivalent at the end of the year is 5 million. Okay, now I would like to explain about the additional point. A summary of the planning. When we see a summary of planning, our planning is more to a short and long term of corporate strategy, and our budgeting concept is aligned with the corporate strategy by focus on more sales and also target for more customers. And our managing tool is a budget, cost, volume, profit analysis and product costing. Budgeting. Next is our capital budgeting. Capital budgeting concern about the financial consideration. While considering capital investment, Nesboost need to look at the proposed return on investment. Okay, now is transfer pricing policy. Nesboost apply transfer pricing policy to minimize the tax burden. Okay, responsibility accounting mapping. Responsibility accounting mapping is involves the company internal accounting and also budgeting, so that it can assist the planning and control of company responsibility center, such as divisions. And why our budget is more important than others? Okay, our budget is more important because we can predict a cash short flow, and also we can plan in advance whether our company need to secure financial, tap into a line of a credit or make adjustment on our payable aside. Other than that, important will have a better handle in cash flow and will also increase our overall financial control. For now, that's all is my part. Now continue my other members. Thank you.
Hi, good day everyone. I'm going to talk about directing operation, and let's see on my slides. We have directing operation, which have cost estimation that contains account analysis, engineering method, high-low method, visual fit method, least square reason method. So from the executive summary of cost estimation, it gives us an idea to identify the cost driver of the utilities that we are currently using it as an example, and also a usage of the utilities at its best level. So what I have chosen is a high-low method. High-low method use the highest and the lowest activity level of a data set estimate of the portion to partially figure out what is a mixed cost that is variable and a portion of that is a fixed cost. This is a table that we have done for high-low method. As you can see, we have to measure this variable cost per unit, which We take the highest cost minus with the lowest cost, divide by the highest activity minus with the lowest activity. As you can see here that I have highlighted, this is the cost that we have selected, the highest and the lowest. After you have figured out, you will work out this calculation and you will get this as the answer. So what we know is, according to the equation, total cost is equals to 0.23 times with that which need company to pay the fixed cost of 1,550 for utilities for every month, whether the company operate in a full capacity or not. So we have this executive summary of costing, which all the costing that can help us to identify the cost of each stage. As a HOD of the operation, I have choose ABC, which is ABC can support manager to see how to maximize the shareholder value and improve the company performance. With ABC business are unable to fully identify all the costs that are associated with the producing of a single unit of product. They are able to develop a pricing strategy and market as much as efficient. This is the example of this ABC costing, where we have sales, which we sell at 10 ringgit, and we have sold about 500,000, sorry, and we have this cost of goods sales, which direct material is involved as 4.499 and direct labor as 0.18, which come the total of 5.17. And when you times it with 500,000, you have this total of this, and you have this marketing expenses, where you minus it and you get 1,565,000 as your net profit. Come back to the directing operation. Directing operation is simply means by running the organization on a day-to-day basis, which include decision making, planning and directing operation activity, and also controlling. What we understand from the managerial accounting is, managerial accounting is a process to identify, measure and analysis, and also interpret and communication information for the pursuit of organization goals. Managerial accounting tools contains capital budgeting and product costing. So we will come to the conclusion why our method doesn't suit the organization as compared to another method. Visual fit is a complexity method compared to high-low method, and also we need a full complete data for the visual fit compared to the high-low method. As the information was not fully complete, we're still able to use this method. Thank you.
Hi, my name is Rafida. I am a head of ZCMA6022 operation. Today I would like to discuss about the CVP analysis and the decision making process made by a manager. Let's take a look. The budgeted planned annual production for the dance boost is 700,000 unit. Sales per unit is 10 ringgit per unit. So the total revenue sales is 7 million, but the number of units sold is about 500,000 times 10 equal to 5 millions, less the variable cost, which is the direct material, direct labor, direct overhead, marketing, and the total contribution margin 7 million less the variable cost, we get 1,815,000. We less the fixed cost, direct overhead and the marketing expenses, then the net profit is 1,458,600,000. So we will construct the table to do the CVP graph for the break-even analysis. Fixed cost 356,400. Variable cost per unit is 6 ringgit 33.7. Sales per unit is 10 ringgit. The break-even unit 98,182, and the break-even in ringgit Malaysia is 981,818,000. So we construct the break-even point, we get the unit and the value for the break-even point. So that break-even point is the minimum, which is no profit or loss for this company. Margin of safety is the difference between the budgeted sales revenue and the break-even sales revenue. Budgeted sales revenue for Nesbus is 7 million. Break-even sales revenue is as we get as above. Thus, the organization safety of margin is 6 million. Projected operation is 4.
Good day to you, Puan Soha. I'm Revati from Profit Group. I would like to present my slides. Here we go. First, I would like to explain about Balance Scorecard. Balance Scorecard is a performance measurement system that considers not only financial measure but also customer, business process and learning measure. We have four major perspectives, which are financial perspective, internal business perspective, innovation and learning perspective, and customer perspective. Okay, this is the balance scorecard. Okay, which just now I mentioned about the financial, internal business and innovation learning and customer perspective. Next, we go here to variance analysis. Variance analysis is about the actual budgeted versus the planned budgeted. The highest percentage from cash generate from operation of 56%, followed by operating cash flow 55%. It shows that Nest boasts as a manufacturing company the position of cash inflow from operation higher than other activities. The cash flow from the investing activity shows 49%. It shows that Net boosts investing the business to expand wider. In the additional points, let's have a look on performance reports. Performance reports to provide a feedback to employees regarding their performance and related status. Analysis of past performance, current status of risk and issues, significant achievement, forecast estimation of completing the project. Next is why our method doesn't suit the organization as compared to others' method. It is because balance scorecard is more to qualitative measurement, but variance analysis are more to quantitative. Therefore, balance scorecard doesn't suit as we are manufacturing company, which are more to quantitative as we like to know if we have made profit or loss. As Investment Center Performance is an organization that is responsible to the top management, as this will become a controller to the cost. This investment center is an extension of the profit center to measure based on revenue and expenses. Okay, before the last, let's have a look on segment reporting. The segment reporting is the reporting of the operating segment of a company in the disclosure accompanying its financial statement. It's required for publicly held entities and is not required for privately held ones. Segment reporting is intended to give information to investors and creditors regarding the financial result and the position of the most important operating units of the company, which they can use as a basis for decision related to the company. Managerial accounting is the process of identifying, measuring, analysis, interpreting and communicating communication to the persuade the an organization called. There are several tools that use in managerial accounting such as breaking down, margin analysis, forecasting and product costing. Okay, the final one is summary of performance evaluation concept and managerial accounting tools. Performance evaluation is systematic evaluation of the performance of employees and to understand the ability of the person to further growth and development. Objective of this is to maintain records in order to determine compensation package, wage structure and salary raise. This can also to provide a feedback to employees regarding their performance and related status. Managerial accounting tools involve capital budget forecasting to help to measure the financial position and also the company performance. That's all. Thank you very much.